The real focus today.
Yep, a nice turnaround on the market. Bang on 1 o'clock when those Chinese figures came out, we saw the market shoot higher, about 20 points, the ASX 200. And the Aussie dollar also responding well to those numbers. As you'd expect, it shot up about half a US cent when that was released as well. But if we look across the market, you could see that the material stocks were, in particular, the best ones to respond to that. In particular, Fortescue, actually. It was down close to 1% in morning trade today. After those figures were announced, it moved about 3% to finish over 2% higher for the day. And I think that was a lot down to do with the import data that we saw. The figures within the import data, iron ore imports continue to rise there. So positives for Chinese steel manufacturing, I think. And I think the data that we saw today continues to suggest that GDP growth in China, which is expected to come in around 7.8% for the fourth quarter, is probably going to accelerate into 2013 and rise above 8%. And I think the market will also watch the inflation data that will be coming out of China tomorrow. With the economy improving in China there, you would expect a slight increase in the inflation rate in China. So that's going to be important in terms of what it means in terms of further easing. Probably unlikely we're going to see much more conventional easing coming out of China because of that inflation rate. But if we look across the market, also the insurance had a good day today. IAG and QBE both higher. Credit Suisse raising their target for IAG's share price. One considerable weakness was the gold sector. A bit of weakness in the gold price before those Chinese figures came out. Newcrest Mining in particular. Interesting to note, it's actually approaching 4-year lows. It's now within about 2.5% of a key closing low level for the 4 years. So that will be one to watch. And the energy sector again struggles to make any ground. Woodside Petroleum again lower for the day. The underperformance of that stock has been quite interesting actually. It was a solid fourth quarter result for ERA. The uranium miner production up 19% for the quarter on a year before that. So they have been targeting higher ore in their mine, and that's really boosted that from their Ranger mine, which is up in the Northern Territory, and that production came in at the top of the company's guidance range. So the key for ERA now moving forward is the Ranger 3 Deeps exploration, as the main Ranger mine is coming towards the end of its life. So they're looking to, that exploration continues. The company's saying today that it is still on track and still on budget. But looking at the uranium price, it has risen a little bit recently. I think a bit of positive sentiment flowing through from the new government in Japan, supporting slowly switching back on some of the nuclear reactors over there. And Japan's a big driver of the uranium price in the short term, because at the moment they're sitting on very large stockpiles of uranium. And if they don't start switching some of the reactors back on and decide not to, they actually could become a net seller of uranium, which has depressed the uranium price. But over the longer term, you'd probably look to other countries to really drive demand. The likes of China and India are going to be big players probably over the next 10 years or so. So the stock price of ERA rose about 1.5% today. We've seen a bit of a bounce back in uranium stocks in general over the past couple of months. But I think with uranium, you need to have a longer term view, because the uranium price probably is expected to recover, but it's going to take quite a long time, and it's probably going to be quite a gradual recovery. So in the meantime, you'll probably see a lot of the players continue to post losses, the likes of Paladin and ERA. If you look at Paladin, they need a uranium price of around $49 a pound for a cash break-even level. So the price is still below that level. So in the meantime, they're probably going to keep posting losses, continue cutting costs. But as I said, probably a long-term investment horizon on these kinds of companies.